All right, let's dive straight into it. Today, we're taking a deep dive into Oracle Corporation, ticker ORCL. Obviously, a colossal player in enterprise tech.
Yeah.
Our mission for you, our listener, is really to cut through the noise on their recent path, stock stuff, future outlook. We're drawing from a pretty comprehensive research report we put together.
Yeah, and what's really quite fascinating here is Oracle's incredible pivot. Over the last decade or so, they've managed to transform themselves from, well, basically a legacy on-premises software company.
Being the old database giant.
Exactly.
Right.
Into a really formidable cloud services provider. And you can see this aggressive shift clearly in their accelerating revenue growth. It's projected at, $57.4 billion for fiscal 25. A lot of that's driven by their Oracle Cloud Infrastructure, OCI,
Right.
and some really bold investments in AI.
Okay, bold is interesting. I saw something kind of wild about them exploring plans for data centers powered by small modular nuclear reactors. Is that real? What does that tell us?
Oh, it's real, all right. And it's not just, a quirky side project. It really signals Oracle's intent to control, well, pretty much every layer of its AI infrastructure. It kind of sets them apart from the other hyperscalers who mostly rely on the traditional power grid.
Huh. So it's about self-sufficiency for all that AI energy demand.
Precisely. Think about the huge power needs for AI, like their Stargate project with OpenAI, this massive AI-focused supercomputer setup. This is about securing future growth by controlling the very basic foundational resources. It's audacious.
Yeah, audacious is the word. So they're not just playing the same game. They're trying to change the rules a bit. And we've seen these bold moves elsewhere, right? Like their leadership in databases, that's classic Oracle. But also the recent gains in ERP. They've actually surpassed SAP there now.
They have. $8.77 billion in ERP software sales versus SAP's $6.57 billion. And ERP, for listeners, that's enterprise resource planning.
Right, the software that runs a company's day-to-day.
Exactly. So it's not just numbers. It shows they're successfully moving beyond just databases into these really critical business operations, directly challenging the big incumbent.
Shows some real adaptability. But okay, our deep dive, it also flagged some significant challenges underneath all this.
Yes, it did. And the first one that really jumps out is, well, their financial structure. Oracle carries a very high debt load. We're talking a debt-to-equity ratio of 441.5%.
Whoa, okay, 440%. So for every dollar of equity.
They've got over $4 in debt. That's significant financial risk baked in there.
That's serious leverage. And beyond the financials, the report also mentioned some, let's say, recurring issues. Controversies.
That's a fair way to put it. There's a history of operational bumps, maybe, legal and ethical stuff. You had that $115 million data privacy lawsuit settlement, which actually led to them getting out of the ad tech business.
Okay, I remember that.
And then there are recurring Foreign Corrupt Practices Act violations, the anti-bribery laws. That resulted in a $23 million settlement. Plus, more recently, cybersecurity incident allegations this year, back in March and January 2025. Raises questions about transparency, definitely.
So maybe not systemic in one single way, but it does feel like a pattern, doesn't it? Affecting trust, governance.
It does suggest that, yeah. It's something to watch.
So you factor that in, you factor in the debt. How does the valuation look right now?
Well, that's the other side of the coin. Oracle's trading near its all-time highs.
Yeah.
And the price-book ratio is exceptionally high, 34.40.
Okay, price book. So market value compared to the company's actual book value. High means high expectations.
Exactly. High expectations for future growth. If you look at it through a strict Benjamin Graham lens, it's conservative value investing, Oracle would screen as overvalued. It suggests a lot of that future growth, especially from AI and cloud, is already baked into the price.
Even with strong cash flow. I saw operating cash flow was robust.
Yeah, it was $20.8 billion in fiscal 25. So the cash generation is there, absolutely. But the market valuation is clearly pricing in, well, near perfection on those big AI and cloud bets paying off.
Okay, so wrapping this up for you, our listener, what does it all mean? You've got this tech giant Oracle making really audacious bets on cloud and AI, visionary founder Larry Ellison still very much involved, showing remarkable adaptability, great cash flow. But
these big moves come with substantial financial leverage, that high debt we talked about. And there's this track record of operational controversies, things that touch on trust and governance.
So the provocative thought to leave you with is this. When a company's stock seems priced for perfection, like Oracle's might be, and its past includes these recurring issues, how many margin for error does it really have to execute on these incredibly ambitious future plans? Something to think about.